Hello, trading has closed on March the 10th, 2023. We'll do our disclaimer, go over our calls, make some predictions. It's my trading plan for Monday, which would be the 13th of March, 2023. Please remember I can be wrong. Any trade you make should be at your own risk. I didn't make a call today because of the employment report coming out. The one thing I did say was if we're going to continue down on the beta, we should have a gap under this low. We did gap under the low, but that gap filled during the day. So on a daily chart, you can't really see a gap. And because of that, I think it's very likely we're going to return to the gold trend line we're going to see in just a minute. We do get to cross one more MEJT target off the list from 2 months ago. That's 38.69.55. I have one more lower target, which is in range, and that's 37.75.69 from December of last year. And the only lower target I have before that, the next lower target I have before that's almost 3 years old, and it's around 3,200 cash. I'm not saying we're going to go there. We got a MEJT sell signal in the afternoon, so this is a sustainable drop. We got the minimum immediately, but nothing requires you to stop at the minimum. What we did do is have a strong down day and then close over all these relative lows. Particularly on a Friday, that's a sign that the selling may have run out of steam. Now, if this could get reinforcements Monday, by gapping and taking out this low earlier, we could keep on dropping. But if we don't do that, I'll look for a bounce. Well, this is kind of a breakthrough of multiple levels of support that I thought were going to hold, to be quite honest. We had this trend line, we had a 200-day moving average with a bounce off the average. We had fib retracements, we had a wave count. I expected that to hold, and maybe that's one of the advantages of doing things a day at a time. My long-term stuff just isn't as good as my stuff for the next day. I don't count this as a gap because you can't see it on the daily chart, so there's a good chance we're going to return to this line. The line's dropping, but right now it's over 3,900. Well, I have to give up on this wave count. We always said it's not the only one, but it looked so pretty. I was hoping it was going to work, but hoping isn't going to get you there. So we have to go back to our original count. And the original count is this one. We had black C of magenta 2 equal to A at 38.59.42. We've undercut that by enough for me to think that's not going to be the end of this wave down. This low should still hold, but often wave 2 is going to retrace a very healthy portion of wave 1. And at this time, the break of strong support indicates that before we're done, we're going to probably retrace a good portion of magenta 1. But I do think this low is going to hold. We also have to go back to this wave count on the weekly chart. We said when we introduced the other one, this was still a valid count, and right now it's the only count I'm going to consider. There's a volume spike in the futures of over 3 million contracts. That's very unusual. It's a sign of capitulation. It doesn't mean you won't see 4 million or 5 million contracts trade on Monday, but usually when you get 3 million contracts, you have to at least be alert for the possibility of a short-term low. Again, I think we're going much lower before we're done. Well, Monday's pattern has the early low. We could gap up. We've broken through major support I thought was going to hold. And before this drop is done, we should go significantly lower. That doesn't mean we go down every day. It doesn't mean we go down on Monday. The gap under the gold trend line was filled during the day, so that makes it likely we're going to retrace to that trend line at some time. Now we have a number of signs of a short-term low. The day-long decline closed over midday lows. For some reason, futures went up strongly after the close. There might be some news event. I don't know what it is. The SPX is under a slower Bollinger Band. It's hard to make progress when you're there. Volatility Index and NASDAQ McClellan Oscillator are well beyond their respective Bollinger Bands. They haven't reversed back through them yet, but when they do, signals a buy. There's a volume spike in futures, so bears need to gap and promptly undercut the low a day to continue the decline on the beta, and I'm not going to say that's impossible. But if they don't do it, we should trade higher, even if we don't close higher. The only lower MEJT target in play is 37.7569 from December 22nd of last year. And after that, one needs to go back to July of 2020 with an unfilled target around 3,200. I don't think that one's going to print. So we just have one more on the list. We have a whole bunch of higher targets that should print at some time, but I don't think that's where we're going next. So we have a major break of support. We have a pattern for Monday with the really low. Doesn't mean you won't gap up, but we have a number of signs that we could have a rebound Monday to that the gold trend line, which is over 3,900 at this point. Now that might hold. So if we bounce up to this line, you at least should consider whether that's going to hold or go higher. But if we start up, I don't think I'd look to give a new short under that price if we're trending up smartly. So Monday has a chance of a rebound, but the bigger picture looks much lower because major support did not hold. The next target is 37.75, and I think it's reasonable that we see that, and perhaps significantly more than that, before this break of support has played out. Have a good weekend, and that is today's call.